Students, today we're going to solve question number 6 from your book from the chapter GST. Pass entries in the book of Mr. Rupani of Gujarat assuming CGST 9% and SGST at the rate of 9%. Purchased goods for 2 lakh from Suryakant of Jaipur, Rajasthan. Now this will become as IGST. Why it will become as IGST? Because this is interstate transaction. The goods are purchased from Rajasthan, and so 9% plus 9% will become as IGST. So for first point, purchased goods for 2 lakh from Suryakant. So we'll write here purchases account debit, because purchase is expense, nominal account we have to debit. Then since we are purchasing, so it will be input IGST, and this input IGST will be full 18%, 9% CGST and 9% SGST, because this is interstate, to Suryakant. Suryakant here is the giver of the goods. So we will write here purchase was for 2 lakh, input is 36,000, that is 18% of 2 lakh, and then to Suryakant 2 lakh 36,000. Okay, so we're going to centralize this. Now we'll write the narration. Okay, we'll write the narration, and in narration we're going to write down purchased goods from outside the state. Okay, next we have here is number 2. Number 2 says sold goods of 1,50,000 to Mr. Pawar of Mumbai, Maharashtra, and a check received was sent to the bank. Okay, so here we have received a check, so we'll write here to bank account, to bank account we will debit. Sold goods to Pawar 1,50,000 and check received for 1,000 which was sent to bank. Okay, so we have deposited this in our bank, so we debited the bank account, and this is from the sales, so sales account we will credit, because sales account is nominal account, and we will write here to output IGST. Here also again we'll write here output IGST account, because we are collecting from the sale. So here sales was for 1,50,000, IGST again 9 plus 9, 18% of 1,50,000 will be 27,000, and so together in the bank account it will go as 1,77,000. Okay, so here we'll write here sale of goods outside the state. Next, number 3, we have goods sold for rupees 2,50,000 within the state on credit. Now here it comes within the state. So goods sold, so we have sold to a customer, so we can write debtor, because debtor is the one to whom we are selling the goods on credit. Okay, so debtor account will be debited to sales account to output CGST account to output SGST account. So here in the sale column, sales is 2,50,000. Okay, so 2,50,000. Now 9% of 2,50,000 will be 22,500, and here also 22,500. So when we add these all, we will get 2,95,000. So here we will write down the narration: sale of goods within the state. Okay, so here it came CGST and SGST because this sale was within the state. IGST, integrated GST, will come when it is interstate, between the state. Next, number 4. Number 4, paid insurance premium. So insurance premium we have paid, so we are going to debit the insurance premium. Insurance premium account we are going to debit. And this is our expense, so we'll add GST. So C GST account will be debited, and input SGST account will also be debited because we have to pay along with the insurance, and this was paid in term of check, so we'll write here to bank account. So insurance premium is 20,000. 20,000. 9% of 20,000 is 1,800, and again 1,800, and so this will go to 2,36,000. This will go to 23,600. Narration will write down: paid for insurance. Number 5, purchase furniture for office for 60,000 by check. So here purchased furniture for office. Okay, so furniture is coming in, so we'll write here furniture account debit, input CGST account debit, input SGST account debit by check to bank account. So furniture is for 60,000, 9% of 60,000 is 5,400, 5,400, and to bank will come as 70,800. We'll write here office furniture purchased. The last one here is number 6. Payment made on balance amount of CGST. Now here I have told you in the theory how to adjust the excess of input GST, IGST. Now let us look here. Okay, let us look here. We have got input IGST as 36. So we can just show this as working. We have got input IGST 36,000 and the collection we got was 27,000. So this collected amount we're going to adjust this with the input and output. Okay, so input IGST means we have paid when we purchased 36,000. So input is becoming excess. Now whatever we have collected from the sale 27,000, first we will adjust that. So we're going to adjust this with the output IGST account debit to input IGST account. So input is what we have paid and output is what we have collected. So 36,000 was what we have paid and collected was 27,000. So we will adjust the output with the input. So we have adjusted this. Next, what is happening here? We have 36,000 as our input. That means we had paid 36,000 and we have collected rupees 27,000. Okay, so what we have done, we have paid rupees 36,000 and we have collected rupees 27,000. Okay, so remaining, that is 9,000. Remaining rupees, that is 9,000, now will be adjusted with input CGST. Okay, so here the next entry we will write down is, okay, output CGST account debit. We have to always adjust output with input. So now all the output IGST is finished. Now we have output CGST. So output CGST is 22500, 22500. Now with this we have to adjust the to input IGST account. So input IGST account that was there we have is 9,000. With output CGST will adjust the output, will adjust the input CGST account. So here out first we'll finish this, then I will explain you once again this part for you all to understand. So here 5400 and 1800, so this together is coming as 7200, and then the remaining will go to the bank, will not adjust with SGST to bank account. So the remaining is 6300 will be there in the bank. And the third one here is adjusting the output SGST. So we have here output SGST account debit, so that is your 22,500 to input SGST account. So input here is 7,200 and the remaining will be adjusted through the bank to bank account. Here it will be 15,300. Okay, so here let me write the narration for this one. The narration for this one will be adjustment of IGST then here it will be adjustment of CGST, adjustment of CGST, and then the last one here it will be the final payment. Okay, so here what we have done, now you notice this 6 and this 3 part of the journal. Okay, here we had our output IGST, what we had collected, it was 27,000. Okay, what we had collected was 27,000 and what we had given while purchasing was 36,000. So here our input IGST was excess for rupees 9,000. Okay, so first we simply adjusted our output IGST with input IGST 27,000, 27,000. Next we came to our output CGST. So from here we found that our output CGST, it was 22,500. So we adjusted this with our input CGST 1800 plus 5400. So that came as your 7200. And the previously that was input IGST, which was not being adjusted, we adjusted with our output CGST. Okay, and the balance will be paid off. Now the remaining output SGST will be adjusted with, now we are not going to adjust this with again this, the balance will be paid off. But if there is no balance, then we will not write bank account. So lastly we adjusted the output SGST 22,500 with input SGST 7,200, and then finally we have 15,300 that we have adjusted with the bank. Okay, so here let us total on the both side. So this side is coming 8,74,400. Okay, 8,74,400 and 8,74,400. Total okay. So this is the IGST and the adjustment of IGST with CGST, and then CGST, output CGST with input CGST, and then the balance is paid off, and then again we adjust output SGST with the input SGST, and then again we pay off the balance. Now if there is no balance in input CGST, then there is no problem, but if there is a balance in input CGST, it will be adjusted with the output will be adjusted with the input, and then the balance will be paid off.